The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast. Joining me on the Weekend Podcast is the man famous for such literal gems as Dropportunity and now Brown Wednesday. You're right, Pete.
Yeah, yes, hello. And can I say, ever-present member of the Weekend Podcast crew, yet again, I find myself alone.
I thought you meant me then. I thought you meant ever-present me. I'm quite present on a regular basis.
Oh, sorry, of the crew, not of the talent, not of the star of the show, but of the crew. I mean, I know I'm the only one that gets paid, but still, I'd expect the other two to turn up.
Yes, I send you £1 in the post every week. £1 coin, the shiniest pound coin you can find. So Paddy, I'd laugh at Paddy having to text us while he was on a plane this week. Just trying to show off. He was more chatty on text than I've ever seen him in my life. Oh, by the way, and he had to drop it in before he tried texting. He asked a question that he sort of knew the answer to, I think. So what is the next milestone date for Truefin? I said, have you listened to any of my content, any of my output, Pad? Any of my output? Yeah. Check out my output, guys. And he said, well, I can't do that at 40,000 feet. What? Are you in a gas explosion or something? Or are you in a plane? And he said, I'm going stateside. Yeah. New York City. Yeah, and then I go to Atlanta. Then I'm going to Saskatchewan. Whatever he said. I don't know where he's going. Massachusetts.
Then I'll be catching the red eye back.
Yeah. Well, you're still down in your portfolio, Pad. So, so anyway, he just texts now. If he's WhatsApping, why can't he just get on?
Yeah, come on, why can't he join the call?
Thinking out loud.
Stateside.
Oh, yeah, no.
Here he comes. Fair
play, he did have some input here. Oh, Paddy joined. Well, good or what, Pad? Have you forgotten how to reconnect? You haven't been on the... When's the last time you were on the podcast? Last time you were on the podcast, right?
2017.
Was when I had hair.
How are you?
Very good.
I'm all right.
We were just marvelling at your message midweek, just showing off that you were at 40,000 feet on the way to the States.
I've never known you so chatty on text, Pad. Just wanted us to find out where you are, what you're doing, and asking stuff. By the way, it's hard to download media at 40,000 feet, guys.
Guys.
Yeah, it doesn't really work at this height, you know what I'm saying?
Yeah. I was in the economy, so it wasn't as exciting as it sounded.
Where are you now, Pad?
I'm on Wall Street.
All right.
Nice.
What up on Wall Street?
Why? Because the hotels are cheap here.
Are they? Oh, okay.
Yeah.
So, have you been to the New York Stock Exchange?
Yeah.
Did you go in? Did you buy any stocks?
No, I just stood outside and told everyone about C4XD.
Yeah, just handing out flyers and stuff. That's good.
What if you just nice to go in, Pat, as a tourist, like, English guy there, put on your best English accent. Oh, hello. I'd like to buy some stocks, please. But wait, I don't. Where do you keep them? I can't. Can I have a look around? Just see what stock I like buy.
There, isn't it? They still have the trading floors and stuff, don't they?
Yeah, they still do that. It's largely, I think, for show, because they have the CNBC come live from there. Jim Cramer, all that guy, they all come live from there. Quite like it actually. We should do that. As I say, they make it in America. They make it an event. I was talking to Megan the other day, watching, and they televise basically the opening bell, and there's a NASDAQ, which they got a live feed from, and they got New York Stock Exchange, and they ring the bell, ding, 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 and there's about 40 or 50 employees of each company just going nuts, woo, 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 woo. And that's a celebration that we're listing, we're raising money, we're expanding, we're growing, we're championing this. What are they doing in London Stock Exchange? Nothing. They just send out an email, RS. We're listed first day. Come on, guys.
This is the issue with unchecked capitalism, though, isn't it?
Don't uncheck capitalism. The way capitalism gets checked is by the market. The market itself checks capitalism.
This is the nub of the question, though, isn't it?
It is the nub, yeah. Well, you're more over nubs than me. I'm a lot more about nubs. You're a big fan of the old nub, Paddy.
I just think sometimes the market doesn't always get it right and needs a little bit of help.
It doesn't. That's why we have what's called corrections. You see?
Well,
that's very healthy.
In the US, for example, they have no healthcare, as we know. So the market is left in charge of that, which I wouldn't say is particularly successful. Whereas in the UK, we've had a little bit of a correction, and we let the state worry about that. And
but hang on a sec. We got the NHS over here, which is very good, and the people working work very hard and all that stuff. But even that has a lot of critics. You know, you were one. In fact, all you do these days is anything Tory you can bash Tories on. I'm not a big fan of Tories. You know, I said my policy of voting is voting for the least worst party. You know, who can mess up the economy the least. That's what I think. Because if the economy's knackered, everything's knackered. That's what I think.
Yeah.
And none of them doing it.
Who's the answer? Yeah, what's the answer?
Last time I had a chance was Corbyn or Johnson. So I think Corbyn's going to mess up the economy more than Johnson. That's what I thought.
Really?
Yeah.
In retrospect, though, it doesn't seem quite so certain.
No, I don't know. Yeah, you're right. Maybe
it doesn't seem so bad now.
Maybe even Corbyn would have done a better job. Now, who knows?
Saying they were dithering and delay. I wouldn't have minded some dithering and delay. To be honest, that would be preferable.
Yeah. Let's move on.
Very sad about that MP. That's horrendous.
Yeah, it is horrendous. But I don't want to bring that into it. So I watched that. It really got me down. I thought, what is wrong with society? What's wrong with people? And they have to stop. The thing is, they have to stop. You know, banning or stopping face-to-face meetings with MPs, and that's a very valuable part of politics.
Yeah.
You know, people.
It's a whole part of democracy. Yeah,
giving you MP an ear bashing. You know, that's a good thing. Face-to-face. That's what you need. Because these days, you can give an ear bashing on Twitter. They just block you. You know, so they can't block you.
Also, we need MPs to be the best of the best, and like if this is what they have to face every day, then it's understandable.
Yeah. Anyway, let's get on to the happiness of the markets. But no, I just got to say, up until today, maybe. I mean, the first day today, Polarian had a bit of a pullback, but it's rallied like a crazy fool. You know, but it's going to have a little pullback. So it's going to have that. You know, but like I said, what I think Pete said it on WhatsApp. Who said a week in politics is a long time? I think it was Churchill, wasn't it? But the week in the markets equally, because going back to Brown Wednesday and now to this Wednesday, completely different. You know, stocks are certainly. Let me ask you a question each, right? First of all, Pad, are you bullish or bearish?
What do those things mean?
I don't know. Pete, bullish or bearish?
He's ambivalent. Bullish or bearish? What for the overall market?
Generally. In fact, let me ask you another question. Think about the macro. How do you feel? Bullish or bearish?
Macro. I think I'm quite bearish.
Yeah. Pad, macro. Generally, you know, the global issues, the supply chain, inflation, all that stuff. Bearish or bullish?
Bearish.
Yeah. Now, think about the micro, the companies you own.
Yeah.
Bullish or bearish?
Yeah, quite bullish. but blind optimism, that is.
You know, but to draw
go on. At some point.
Say again?
The two are going to interconnect at some point on some of them, aren't they?
Well, no, that's the trouble. You know, whenever you think that's why I decided to disconnect from the macro, have a top-level view of it. Don't get bogged down. Don't let it instruct your investment ideas, because when you actually think of it, for example, the companies we own, how are they going to get massively affected by what's happening? And whenever you think of the companies you own, of course you're bullish. Otherwise, you wouldn't invest in them. You wouldn't if you thought they were all going to be rubbish or go down. You'd just get out, wouldn't you? So, but the macro, you have very little control of the macro. Most of the economists' forecasts are always wrong or inaccurate. It doesn't play out as we said. Like I said, for 20 years, people say, interest rates are going up, and now even now, interest rates are going up. But we don't really know, and they've never been accurate. You think they may go up, but inflation, for example, is coming. So what do? Well, cash is useless. Bonds are no good. Where do you put your money? You put them in stocks really for a while, can't you? So that's not a bad thing. What's that? In the way?
NFTs. I'm going to buy some really rubbish children's drawings.
Yeah, NFTs. I know. What a waste. Well, they're not. People are making. What's annoying? Almost what validates that kind of investment, and crypto as well, is that it goes up. It doesn't mean it's right or it's correct. It just means it's going up. Or does it mean it's right? Because if you invest in a rubbish stock and you know it's rubbish, but it goes up, are you right? Or you just got good timing?
Wait, but all of that is it's whatever someone's prepared to pay for something. Everything is that, isn't it? So it's like Banksy's thing, the artwork that got sold this week, that what a blind to the guy that bought it, or woman, or whoever bought it, and then it did the shredding, They bought it for a few million, it sold for 16 million because of it's now shredded.
Oh, did it?
Because, the original auction, the final bid, and then it shredded, it catapulted its value because of the novelty and because it became historic and famous in an instant. And so obviously somebody this week, and a few people were bidding. So obviously people were prepared to pay 16 million quid for that. And it's like, okay.
Yeah, do you know what? It's almost like in the world of fantasy. That's why I break down to two different kinds of stock. And I say, when you're looking at companies, you should look at, in micro caps I'm talking about, small caps. There's two different kinds. There's the hope, high potential stocks. And there's the actual, that's potential value generation. And there's real value generation, which is generally basically cash flow coming in, the assets, physical assets getting bigger and bigger, and the company's value growth. It's real value. But the most explosive growth is on the hope high potential stocks, because they're not tied or anchored by valuation metrics like revenue, sensible valuation, and profits. All they're anchored by is fantasy, hope, hype, potential. So if you get in early on those, you've got to get in early. Then you can have a cracking, gain. But if you want to have, but they pop and drop. The pop can last for a while, but they will drop after a while. If you realise, hang on a sec, I'm invested in this company. I don't really know what they do, but they're now gone from 10 million market cap to 150 million market cap. They've got no revenue. Sooner or later, people think, hang on a sec. Yeah. You've got to have some kind of sensible valuation metrics. That's why with NFTs, no one knows what they're worth unless someone really pays something for it. So it's what's the Last Fool's guide, isn't it? What's that? The Last Fool. Have you heard of that? It was the last fool to pay for it before it collapses. Google that if you're on a computer. It's like the last fool theory. Basically, don't be the last fool. As long as you can be the middleman, passing up and buying and selling on.
Yeah.
But that's what I'm saying. If you want to make a quick buck, you got to get the timing right. It's all about timing, and those explosive potential stocks, that's potential valuation generation rather than real valuation, are the ones that shoot up, but they also shoot back down when people start to realise, when some people start to be a bit sensible and saying, why is this company that produces something I don't understand that happened, what it does really, is worth 150 million? People, good question actually. Good.
Good spot.
Maybe we should start thinking about de-risking a bit, But But no, I think deciding not to invest because you're focusing on the macro is a bit like not planning, to do some kind of event in 6 months' time because you're worried about the weather. You don't know. You don't know. You can't say, I'm going to have a wedding maybe in September, but let's not do September because it may be a bit, weather may be bad, so let's not bother. But you can't do that. You may have a cracking day. Like I got married in September. It was a nice sunny day. So, you wouldn't think that, would you? But there, Anyway. So Pat, can you say what you're doing out there or not? Is he still with us?
Oh, he's disappeared. Paddy's dropped out. That wasn't that. That was a fleeting visit by Paddy there in Wall Street. Maybe he's gone to do some trading.
Yeah, exactly. He can't say to us now that he's actually been on a podcast recently. That wasn't that. You've got to spend at least 5 minutes on a podcast and say a guest maybe. Go. I've seen longer appearances by
Steve.
Where's Steve today?
I don't know. Where's Steve?
Drinking.
An enigma. Bringing it back to stocks, the Polarian rebound was obviously very nice to see this week, and a lot faster and higher than I would have envisaged the bounce. I'm not complaining; it's okay. But what are your thoughts on that in terms of? He's pulled back a little bit on Friday, didn't it? I see that. Yeah. I saw that. But
the thing is, it massively oversold. I think when people realised the actual issue wasn't as big as we thought. And I said lots of factors played into that, didn't they? Just the day the date was released, the bad news. The time the date was released. But like I said, if it was released at 7 a.m., people would have had about an hour to digest. And Paddy just said, "Sorry, boys, had to run. Love you, bye, kiss." What? Do you ever put a kiss on the end of a text to the fellas? I'm not.
I might start doing it.
I'm happy with whichever way you swing. But to me, I'd never feel comfortable putting a kiss on the end of a text to other boys.
Oh, I'm going to start doing that to you all the time now.
I never return it. I feel I sometimes if it's one-on-one chat with someone and someone puts a kiss on it, and I've often had that. And I thought I feel almost I have to put it back to them to give them a kiss back. I can't. I just put my thumbs up. Thumb up. Yep, cool. Hey, buddy. Yeah, all right. I don't do kisses.
Before you know it, you're in bed with them, and he's like, well, what happened there?
With my thumbs up. But literally, that thumbs up is a bit manly, isn't it? After a kiss, cheers, I'm a man, I use my thumb, cheers. Yeah. Anyway, it's a malaria. But the time of day, no time to digest the news. That it wasn't as bad as we thought. In fact, we didn't really know. That's what I said today with Paul Hill. When you read RNS, you learn. You have to do some more research sometimes. Like when I said that came out, complete response letter. Is that a different kind of phrasing for FDA approval? No, I don't think it is. Let me just check the RNS. You read it and you discover, not all complete response letters are the same. There's different levels of seriousness, isn't it? So when you get that, and in fact, there was a Telegraph article out this week, and that article in there was a quote from a significant holder, a Tyndall investment. They own 2.6%, and I know Richard's been talking to all the significant holders, and they basically said they've taken on a new manufacturer to cope with the demand, and then of course. It was the old manufacturer was probably in the FDA proposal, and so the new manufacturer probably hasn't been tested or to a certain standard or level as the old manufacturer. So can they still produce the same machines at the same quality, same standard? And that was the snag. So if they can, of course, they just have to redo it and test it and show them yes they can. They're exactly the same.
But equally, I think going back to your comment there about understanding what CDL letter is. Is that right? Yeah.
CRL, complete response letter.
CRL, sorry. Yeah. That's it. I still haven't got it. CRL.
It's funny though, we didn't see the complete response letter. It was a complete response letter, but not to shareholders. In fact, we saw very little of the letter. Yeah. In fact, we didn't see any of the letter. How do we know it was complete? Anyway.
But I think equally some people see that and they know that, that's a bad sign, and then sell just without looking into it. And understanding that, it's only a manufacturing thing and it's not as bad. But that's why we saw that tumble of the price, because people, that's not, it's not an approval. We got the complete response letter instead, and it sold.
I don't blame people selling because what's changed. I mean, the panic of selling. I mean, Vadim came on the podcast and he said he sold at the wrong time. He panicked as well. Yeah. He's a head of healthcare, SB Angel, and he said because it wasn't what I wanted, and it was it just scared me, and I thought that's not good. But I don't know, but it's just the timing, isn't it? I mean, when you have a big sell-off like that, it's pointless selling there. It's like the market makers are laughing. They're just chopping your legs off pretty much, and they're going to sell your legs back to you at at a higher price. And my legs, you sold them.
And talking in a similar vein about reading or not reading an RNS, the Hemogenics RNS that came out this week.
Oh, classic that,
That was classic, because I saw that and thought, it looked good, and I started reading it and saying, hold on, they're paying them. But it's still good because, I get it, because it's, you're buying into basically the IP, and then that helps, down the line, that could be. Yeah.
I saw people ramping that on Twitter, hoping people wouldn't read the RNS,
Yeah, it wasn't.
Eli Lilly, I saw one guy say, 227 billion market cap company. What's that going to do with it? I know they're not transferring all their assets to you. Essentially they've done a collaboration, as I can understand, with Eli Lilly. Eli Lilly then say they're not interested in taking it forward any further, so they're now relicensing the IP that Eli Lilly hasn't developed back to themselves. So they had to pay them, or they're going to pay them. So it went up by 25%. Yeah, and I think it ended up the day pretty much flat or a couple of percent up.
I think it was down.
Next day it went down. Yeah. So reading the RNS. Is that you coughing, Pete? What have you got there? Is that?
I don't know. Just a cough. Okay. Hopefully,
that's fine. It's the famous last words. It's just a cough. Yeah. That's the last thing he said to me.
I told you.
And that's on his headstone now. It's just a cough.
Right.
So read the RNS. And the thing is, selling at that drop off was scary. But one of the things is like, if you realise it's just time to the market and you don't want to wait that long, fair enough. De-risk or get out and say, I'm going to put my money elsewhere because we've got another year maybe. And almost like sometimes you've got to be. To do well in the markets, you've got to be conservative on everything. You've got to say, okay, they're doing 2 to 6 months. But look at that as best case scenario, and say it'd probably be, knowing how it works with the FDA, and give him a call. Hey, can I speak to Jeff, please? Yep, yeah. Jeff, can we get a meeting? It's Polarian. All right, no, Jeff is not in. You just said you are Jeff. No, yeah, I thought you said, do I know Jeff? Not, is Jeff, am I Jeff? So, yeah, you're going to have to wait a couple of weeks for that. So, you never know how it works. I mean, but when you're dealing with massive regulatory bodies like that, they're literally drowning in red tape. It's not going to be a fast thing, is it? If it in 2 months, it'd be a miracle if they got something done in 2 months. But it could do. You never know. But plan. What's that word? Plan for the worst, hope for the best. Is that it? Or hope for the worst, plan for the best. If you hope for the worst and plan for the best, no, that's right. Plan for the worst, hope for the best. Is that right?
Work to the plan, and the plan will work.
Man with the plan is better than the man called Stan.
Yep.
Okay.
A man in the hand is worth two in the bush. No, that's not right.
A man with a van will always get work. I don't know. It's one of those anyway.
Yeah,
if you base it on the worst case scenario, then adjust your position. Like I say, even if you look at growth of companies, never go with ultra bullish growth. Just make it conservative, average, or even valuation metrics. Make it average. Don't go over top because you'll be disappointed.
Yeah.
In fact, that's why. Go on.
I was going to say with Polarian, I'm expecting the share price to sort of drift lower now. I would have thought, but we'll see. Who knows?
Yeah, no, I think the thing is, drift, maybe even go sideways, up and down. I think it'll be volatile for a while now. I think it'll stay around this level, go up and down, up and down, and down. You'll have because we've gone from massive oversupply to massive demand, where the supply has been stopped because all the sellers gone, and then all of a sudden people jump in. Whoa, this is a good stock to get in. It's not a problem because people learned that it wasn't such a big deal. So you got come from massive oversupply, say 100%, then they dried up, then almost 50% sort of or 60% demand has gone back up, and now the volume will drop off a little bit, so it'll be a bit volatile. But it'll go sideways, I think, for a while. Yeah.
And that's going back to like hemogenics and all those sort of. I mean, because they get traded and it's really volatile, and they're very small cap stocks. It is about looking at longer term, bigger picture, not looking at the weekly share price movement, and just kind of understanding the business and knowing the potential.
But with hemogenics, I can't bother with that anymore. It's like because I don't know 20%. I go out because do you know why? I just don't want to sit there for ages and ages waiting for some news. And I think I much prefer just to add it to a stock that I know is generating some revenue and some real value, and I can't wait for. I'm going to wait like 6 months maybe for a 10 bagger to come. But will it come? I don't know. They may. I don't know what news is coming out. Just it is a punt. They've got good stuff there going on. I accept that, but
it's the fun corner stuff, isn't it?
It's fun corner stuff. Yeah,
fun corner. Yeah. A few having a few punt stocks in there, but then if one does go like crazy. You'll still go, I wish I had more in it. But but equally,
but you know what? It's just funny though. I was talking about Polarian, Paul Hill, on the video there, and he's asked me a risk, and he was saying, you got 5 stocks. He talked me through them all. Like I want to suggest, like I didn't know the market caps. I know what they are. My aim is to go from micro cap to mid cap. And I think the stocks I've got here can do that. That's why I'm invested in them.
You think all 5 of them could go to mid cap?
Well, not all 5. I'm not planning for that. I'm planning something to just trundle along. But I think there's a good chance that a few of them could because they've got all the metrics. I said, when I know the risks. I mean, I've got a little spreadsheet there. I've looked at essentially. No stock market investment comes without risk. All right, none at all. I've been in big cap stocks that have taken the hammering. Like I said, if you look at some of the big caps over the last 10 years, for example, Lloyd's Bank, people like that. In fact, Royal Dutch Shell went from 30 quid to 8 quid or something like that. The biggest caps. So you can take a hammering. Even now, Boohoo, one of the darlings of AIM, it's a £3 billion company. It's gone from it's lost about 35-40% in the last few months. Yeah. So.
Do you remember when you went through that phase of owning Royal Dutch Shell, and I think you said the immortal words, "I'm going to hold this forever, or for the rest of my life," or something. And
did I?
6 months later, you sold it.
Yeah, I got a bit of profit. I'm out bored.
Bored now. I'm off.
Yeah. So look at Boohoo, for example. It was 4 quid. Wait. This time last year, 4 quid. Now it's 1.89. A 50% drop. That's a biggest stock. So when you look at it, investments, you have to look about not only what you're prepared to. It's all about your risk reward threshold, isn't it? How much do you want to make? How much can you stomach in volatility? And like I said, sometimes market cap and risk are not equally aligned. So I can find companies that are, sort of sub 20 million market cap was where I start to fish. And they are super high risk. And I'm talking about oil and gas stocks, no revenue stocks with very little cash, or all this stuff, or convertible loan notes and all that. And, or dodgy management that always place, raise money all the time. That's high risk. And also when they have no outlook of profitability anywhere down the line, they're just placing, all they produce is extra shares every now and again. That's high risk. Oil and gas, now, if you look at my schedule, for example, I go through schedules, my strategy, and I go through all those metrics, then you're pretty much, you're looking at a decent quality company that has the potential to be a mid-cap. And I'm talking about things like, are they nearing, do they have enough money to get a profitability on a regular basis? Is that going to happen? If not, wait, because they're going to have to place and raise more money. Okay, sometimes, business doesn't run smooth and operations get upset and they may need to raise a last time. But you don't want to be, constantly worrying about getting diluted all the time. So you look at that. You look at whether, the board have skin in the game. It's in a hot industry, for example. You look at the valuation. You look at where the share price, where it's been, is it trending? So I mean, if you look at GARP, GARP, growth at a reasonable price. That's the name of the timber. Now there's two elements to GARP, and that's what I'm looking for essentially. You've got to look at growth. That's the most important thing among small cap stocks. Growth. Do they have growth? And how do you measure that growth? Generally top line. Now that's all about the potential of the company, the growth. Now the valuation part, the price. Or they put it in there because it's nice. It's really value than price, but price is related to value. But that's so growth is about the upside. Value is about the downside, pretty much. Because if you invest in a company that has good growth, let's say it's doing 40% a year, revenue or something, but they're valued at like 100 times revenue. If they miss one of their estimates or forecasts, they will fall off a cliff. So if it's valued quite conservatively, it's never going to fall off a cliff because it's near enough, net assets anyway. So that's why you have to have the both aligned. But if you manage to get that growth and that value, that's a cracking, So.
And the thing is, like,
so Paul was just questioning me on, and I was saying I'm happy with 5 stocks. I know the volatility in that. So you have 5 stocks, and let's say you have 5 stocks, and they all take about 20% of your portfolio each, and you have a company fall by 50%, which is unlikely to happen. It did it with Polarian, but Polarian doesn't fit my strategy anyway. That was one of those outliers I've had for over 2 years that I really liked, and I thought the binary play here was not as, it was a 9% chance of success. From going forward, I'm never going to trust any, when it comes to regulatory bodies, I'm not going to trust any brokers. I'm going to say it's a binary event, full stop. There's a 50-50 chance here. And if it misses that, it'll drop by 50%. And so if you own 5 stocks and one drops by 50%, you're all automatically taking 10% off the value of your portfolio. Can you handle that? If you can, that's fine. Because if you
but then Polarian, as Polarian's proven, it bounces back if it's a good stock. It isn't like a duster, gas, oil and gas stock, whatever. It's taken a blip, but it has bounced back because there's a lot of support in for it.
But equally, on the quick reward side, if you own 5 stocks and one of the stocks doubles, then your portfolio goes up by 20%. Right now, that's nice, But if you halve that and went to 10 stocks at 10% each, that would only be 10%. So a stock doubling is not that easy. And if you only get 10% from one of those doubling, I think, no, I don't want 10 stocks. I want less than 10 stocks. I want more reward. And for that, I've got to take on a bit more risk. But as long as you're happy with that risk-reward profile, it's fine. Some people aren't. I saw a tweet today from a guy, Michael, on Twitter, who's on the podcast. He's a good trader there. And he's very much into learning about the markets and he writes a blog and there's a club as well. And he said someone sent him a message saying they decided to pack it in. Because it's too stressful. Where's it by? And sadly got a message from someone who has quit the markets because they were on the verge of a nervous breakdown, as well as destroying themselves and their family. this business isn't an easy one. It's becoming more stressful than fun. No, if it is becoming, then it's time to take a step back. And I said, yeah, no, I agree. I said, through interactions with other investors, I realised it isn't for everyone. It's largely emotional, and we're all wired differently. It's been relentless for small caps and micro caps for 6 months. If it's having a detrimental impact, it's best to remove it from your life because it isn't worth it. Get in a fund. If you want to invest, get a fund and ignore it. I can't have a fund because I find it boring, and I want to be more active in that. I want to know what individual businesses, and so
I think you're like I was saying about your Royal Dutch Shell, and you were going to keep it forever, but there's a sort of boredom element to a big lumbering stock like that, isn't there? Yeah. So whereas, and to be fair, you've held these stocks now like Polarian and whatever for a couple of years, and you are holding, but they are still fun, aren't they? They've still got potential, and they've still got an interest, and they're on a journey. So that makes it an interesting thing. But yeah, if that guy, I can see how things could get very stressful if you're depending on what stocks you're in. It could be. Well,
that's
really
about
bad.
diversification. I think if you're losing, I think David Gardner, a good podcast, the Gardner, Tom and David doing Motley Fool.
Oh, yeah.
I listened to him on a podcast this week, and he called it, I think, the sleep number. It's like. It's almost like if you can't get to sleep because you're thinking about your stocks and worrying about them, you're overexposed.
You're overexposed,
completely. If you can't sleep at night, and it should never be like that. And so it is all about personal choice as regards diversification. And Paul kept questioning me, talking about the size of my stocks, and he said, you're playing a very high risk strategy there. I said, yeah, but what I meant to say is, risk isn't necessarily attached like for like to market cap size, No. You can have some very risky plays at 500 million because they're way overvalued, And I've seen companies, in fact, I've seen companies very well known recently, I'm not going to mention any names, but they've more than halved because they're over 500 million. Now, if you get a small cap stock at, say, 20 million, and it's got 2-3 million in cash, it's not burning any cash, it's growing, then, and it's in a hot area, then the risk is quite low. If you've got a company that's valued at 500 million with no revenue, it's risky,
Yeah, and if you've got a portfolio of 5 stocks and it's diversified across 5 different sectors, you are mitigating some risk. But yeah, it is a riskier strategy, isn't it, than being in 5 Royal Dutch Shell type companies.
But I did say, listen, I know it's a risky strategy, but it's a high reward strategy. That's why I've done close to 8,000% in 10 years. I wouldn't do that in a fund.
Well, that wasn't that strategy. That's
no, it's a bit of a change. But but the most money I've earned is in the last 3-5 years in micro caps. So
one stock. Sorry, one. Shall I move on? It's connected. One stock I was going to say that is a classic example of doing well recently, and I only saw. I was completely oblivious to it until this week. Audio Boom. Which we were in 3 years ago, 4 years ago.
So annoying again. Do you know what? It's like
pulled along forever, didn't it? Got nowhere.
Yeah.
I think I sold a small profit or even a small loss, and then I hadn't noticed. But this last year, it's gone absolutely gangbusters.
I think I was obsessed with that as I was almost not as much as Escape Hunt, but that and Argo blockchain, and I got all of them, and Open Orphan. I got all of them because the thing is, when your thesis is right. And podcasting is a very hot area. Everyone's starting podcasting, and it's a very hot area, and the growth is there. You stay with it. Even if you reduce and ignore it for a while, because I think I was a bit overexposed in that at the time, and I just wanted to really go. But I know now it takes ages. Businesses take ages to get going. You don't know if you're a trader, you want it to pop on the day. You can't have a trader's mentality if you're an investor. If you're an investor, you can do multiples of your initial return, but you've got to have patience, and that's it. Like I said,
the Wolf of Wall Street's returned.
Sorry, guys, we had turbulence on the plane, so I had to bail out briefly.
Okay.
That reminds me of that gag, actually. I think Gavin told me that. There's 2 guys in a factory there, and he said, "Oh, I can't wait till tomorrow." He said, what's happening tomorrow? He said, "This time tomorrow I'll be on that plane." He said, "Oh, really? Where are you going?" He said, "I'm taking half an inch off the bedroom door."
Yep.
That's a bit of a carpenter joke there. Carpenters would love that.
Good chippy gag.
Yeah.
Sorry, I interrupted you. Oh, no, Paddy interrupted us. You were saying Audio boom.
Audio booms were a 10 bag. Do you remember? Were you with us, Pad, when I was obsessed with audio boom? I wrote blogs on audio boom. I was a big fan of it. The CEO used to come on the podcast. I was really bullish. In the end, I just lost patience with it. It was 10 bag, pretty much.
They were doing that weird reverse takeover thing, weren't they?
Yeah. But,
I can't even remember the story, and I don't really know. Obviously, it's done well in the last year, podcasts and advertising revenue and all the rest of it. But I've missed out the story. I don't know how it kind of got to that point. But equally, I suppose the other thing to look at is if we hadn't got out, we wouldn't have had then that cash to put elsewhere and perhaps lose. No, that money's gone into some stocks that have done well. So, swings and roundabouts.
But you know what? I genuinely see, I mean, the two stocks I see gaining traction now. You're talking about sort of, rampers and all that stuff. Did you see Gfinity this week? Excellent business, digital media, if you're in the right areas, and you can up that value per user and up the users as well, which Gfinity is doing. And I don't know if you see PS5s, you can't get hold of them anyway. It's like they've gone nuts. And
Stock Insider.
Yeah, Stock Insider. So literally, they'll tell you what it is. So Megan's got access to my emails on her phone. I don't know how she got that, but she got access to my emails. So I can't, I have to cut the fruity chat on emails. Yeah. Just leave that to text. But yeah, so she said, "Oh, hang on, there's a PS5." Then she got an email from Stock Informer. I didn't sign up to the notifications. You can get that. By the way, Stock Informer has been acquired by Gfinity. But anyway, got the notification. PS5 is available here. She called up and she was a bit late. I think she was about 10 minutes late to the email, and then she queued online for 70 minutes, and of course, all gone. Then she's got a connection from somewhere. I don't know, one of the shops in town. And he said, no, we can get one of these probably. In fact, let me call someone and say, I'll call you back. And she called one of these shops or Currys or somewhere that has them. And they said they had 15 delivered in the morning, and they were gone within half an hour. And said, oh, right, okay. So PS5s are going nuts. So that's a very hot area for Stock Informer. If you want to find out stock, it'll text you straight away. You've got to get onto it very quickly, though, Yeah, but Gfinity, for example, I don't know if you saw this week as well. Just going some of the rampers talking about the hemogenics, how they ramped that Eli Lilly thing, but it wasn't Eli Lilly paying them; they were paying Eli Lilly. So, but anyway, Gfinity just didn't even do an RNS about their New World campaign with Amazon Games. So they've been chosen to deliver a launch campaign for New World Amazon Games. Now, if you look at all the brands that Gfinity have hooked up with and helped, then Amazon, I thought, do you imagine if some rampers were in Gfinity? They'd be going, whoa, Amazon, Bezos, richest guy in the world, Amazon, boom, $1 trillion company, they're buying Gfinity, woo, and Gfinity didn't even...
So we do need to get some of those.
Just Gfinity didn't even RNS it. It's like, but it's amazing. But no, that... They are adding. It is like that snowball effect, basically adding, and the amount of sites they have goes up, the value per user goes up, the amount of users go up, and it's one of the things that it'll be chucking off lots of cash. But you've got to wait. It's not going to happen overnight. And in fact, John said that to me. So it's not going to happen overnight. We're going to get there, but it's not going to happen overnight, and that's the thing. I can see that being a mid-cap. Not easily, but it'll do it. Because they really do very clever things. Go on.
When I said Stock Insider, I thought that's not right. Stock Informer, isn't it? Yeah. Stock Insider is a very different website. Yeah.
So how do they know where the PS5s are?
Good point.
It's very clever, isn't it?
Yeah, how does it work?
I think it's just basically on website data, scripts all website data. Whenever there's a new one comes on, they literally ping it back straight away. So it's very clever, isn't it? Literally, if you go on there, it's got a spinning dial, refreshing the page every second, and you can see all the places it's sold out of. And in fact, at the moment, the only two it's available on, like eBay, where people are charging $3,000 for PS5, which I don't know how much they are normally, about 400 or 500 quid, are they? So $3,000 they're charging for that at the moment. But with the supply chain issues and all this stuff, getting these, it's only October. You imagine what's like in November and December, people trying to get PS5s. It's going to be nuts. And
is the PS5 better than the PS4, or is it just...
It depends whether your favourite number is 4 or 5. I like 4. My favourite number is 4.
Because 5's a bigger number, isn't it, I think?
Yeah. It's like what's the difference between iPhone 12 and 13? Not a lot.
Yeah.
Yeah.
It's the thing, like, PS5s haven't got cameras on them, have they? So, like, what could possibly be better about the 5 compared to the 4?
It's just better processing power, Pat. It just looks nice in the corner. You know, it's just the processing power, man. It's the graphics are phenomenal.
Okay, yeah, that sounds legitimate.
Yeah. Well, I suppose the better these games get, I mean, they need more processing power, don't they? Somehow, I don't know.
Why don't they just make enough?
What's that, Pat?
Why don't they just make enough?
Yeah, that's the problem, isn't it? It's chips, isn't it?
Right.
Chip shortage. Yeah.
The chips are down.
Yeah. Have you seen that everywhere at the moment? The way I see this, right, at the moment, right, people who stock goods, you know, that'll do well at Christmas, they've got to be in stock now, haven't they? You know, they've got to have the stock now, not in December, now. So that's why we're seeing ports around the world, pretty much, apart from, you know, there's problems that the HGV. I know you're a fan of Brexit, guys, but if you watch CNBC, you'll see a problem.
Hold on. We're not fans of Brexit.
Yeah, I know.
Quite the opposite.
Yeah. So if you look at CNBC, you'll see there's problems with HGV drivers in America. There's problems with supply chain issues around the world. So it's happening everywhere, you know. I'm not saying Brexit helped in any way. It doesn't help. It compounded it, probably, and the pandemic.
It's nowhere near as bad here as it is in the UK.
We are in the... You're bad. You've been at Wall Street. Where have you been? Have you been standing at port asking?
I've been watching the news. So there is an issue here. But it's not in anywhere near comparable as is to the UK. There are some things that are proving hard to come by on the West Coast. It's not a national problem. And
well, that's not what they say on CNBC. They talk about that every day, about supply chain issues.
Yeah, but it's a nice thing to sensationalise, isn't it? But
well, it is in this country. It's not a problem. I've not gone into a shop recently and not been able to buy something. Okay, admit I haven't been into a shop recently and tried to buy something, but yeah, I've not actually been in a shop. But in fact, no, I didn't. I went to Asda yesterday, right? And what did I buy? I bought some oat milk and some fruit. Everything was fine.
That's a relief.
Yeah, it was.
I was in Tesco last week and they didn't have any oat milk of any brand. So
Have you tried an alternative?
An alternative to the alternative?
Yeah, like I bought coconut milk. That looks quite nice. Coconut oil is expensive, isn't it? I was watching a documentary on that on Twitter, on documentary video. Amazing. Like 10 to 12 times the price of normal oil, coconut oil. And a lot of it's done by hand. In fact, where is it? Is it Philippines? Most of the coconut oil comes from Philippines. I didn't realise that. Aloe vera as well. I've been to holiday in Dominican Republic, and a lot of aloe vera comes from there. And all that's done by hand as well. That can be automated, surely. That's nuts. Anyway, how do we get from Gfinity to coconut oil?
To automating the production of aloe vera? I don't know.
No, I'm just saying. Look at the brands that are associated with Gfinity now. And by the way, Amazon launched its first hit game, New World, in late September. It was consistently among the top 3 games played online and the top 3 bought on Steam. Amazon CEO Andy Jassy, that's a good name, says that video games could end up being the largest category in entertainment over a long period of time, and that justifies the company's long-term investment. So it's a hot sector, you know, and it's a good company to be in, and you'll see the flywheel picking up. Sooner or later, warrants expire this week coming up. So the last of those warrants, which have been a drag on the share price for a while, they expire. That means no one else can exercise their warrants. And someone said, do you think there's a lot left? I said, well, do you know what? People who haven't exercised them till now are either very confident in the business and won't sell them, or are dead. You know?
Yes. Yeah.
Because you wouldn't leave it last minute, would you? Why would you? But even that, there's not many left. There's about less than 20 million anyway. So, I see, like I said, my strategy is go from micro-cap to mid-cap, and you got to look at risk-reward. What else was I going to say there? Yeah, Polarian. Trufin, good news there. Trufin's a good one, see? Because Trufin, we've only got 5 stocks. Let's say you've only got 5 stocks. Trufin is 4 stocks, pretty much.
Yeah.
4 businesses. So it's a little fun there. And,
so it's like you've got 8 stocks in total.
Yeah, sort of, yeah. But, and they're fintech, and they're all starting to... But, I don't know if you saw people worried about the Arrowgrass. Arrowgrass was this fund that held 73% or 75% or 73%, I think, or 74% it was, 73.99 of the company, which is not good for any company really. But they closed, they went bust. That fund went bust. It's not good. People thought, oh my God, they're going to dump that into the market. Then all of a sudden, they've placed 53% or something like that, with 54% with institutional investors a few months back. And so it's 19.99% left. People are thinking, oh, no, they're going to dump that in the market. They're not going to dump it in the market. As fun, you can't dump stock into the market when it's illiquid. It's not no point. Just drive the share price down. They wouldn't get rid of the stock at a decent price. So what they do is go to the institutional funds that took the stock off the last time and do the same again, which they did at 55 pence. James said to me, by the way, oversubscribed this placing was twice over. We even had to tell our biggest shareholder, Watrium, which is a Norwegian sort of generational investor, they hold forever, that they can't take part in it because they own 20% already because there's too much demand elsewhere. And so that's good news, isn't it? So, and if you look at it this week, I've got a little spreadsheet here, of the shareholders up there. Gresham House has got to 10% from 6%. Lombard Odier up to 6.7%. All good funds these are. Who else there? Jupiter Asset Management, big company, up to 5% from 4%. Crux Asset Management, another one, up from where are they going? Oh no, up to 3%. So these are good companies, sticky long-term holders taking up this chunk of stock. There's about 10 million shares left. We'll get TR1s and that somewhere, but they'll be, good institutional holders. So that's good, and I think this is going to go well. Trufin, I think it's underpinned. The more you learn about Oxygen, the silent hero there, the more I like it. Yes, it's a market leader in council software.
I absolutely love a sticky holder.
Yeah, I love a sticky holder. Who doesn't like a sticky holder? Because once you got a sticky holder, you got a holder that sticks.
Yeah, that's it.
Just to go over Oxygen, 90% of their revenues over the next 5 years are already in contracts. 90% over the next 5 years. Now, private equity love that. They love, visibility of earnings going forward. It's now cash flow positive, so all they have to keep doing is adding new contracts. They're by far the biggest in that market in the council sort of. What do they call it? Invoice funding, all that stuff. So they're the biggest in there. And they're cash flow positive. They're growing at 20% per year. Cash flow positive, sticky long-term recurring contracts, lovely. Stargo will be cash flow positive with the Lloyds deal. Virtus in their cash flow positive. Lots going on there. It's going to be good. Anything else, boys? Oh, by the way, I did a Twitter poll. I don't know if you saw that. What's your opinion on using rockets in relation to stocks when it comes to investing? What's your opinion? Right. What's your opinion, Pad? Paddy, do you ever tweet about investing? It's all politics and sport, isn't it?
Yeah, absolutely. Mm-hmm. That's my vibe.
Yeah.
No one following me needs to know.
That's your bag. Yeah.
Interested in.
What are you saying? Are you not as interested in investing as politics? What, Paddy? Investing is a bit more interesting than politics. Politics just argue. You can't do a lot about it. Don't argue about it. Just get involved.
You have to remember what Twitter's all about. And me shouting into the wilderness about an AIM stock that no one who follows me knows about is utterly pointless. Whereas me shouting...
No, hang on, Pat. Hang on. I've got a role for you here. I want you to be the biggest, most rampiest person ever, right, on stocks. No, because these are the results, right? What's your opinion on using rockets in relation to stocks when it comes to investing?
I don't know what that means.
Well, people, rampers, just trying to ramp stocks just to try and get the share price up so they can trade it and get out 10, 20%, and just, like I said, for example, this week, Hemogenics did a deal with Eli Lilly. Eli Lilly is a $230 billion company, but people kept saying, oh, wow, but this wasn't any kind of deal. Hemogenics paid them to get their IP back because Eli Lilly didn't want to use their IP. So people said, Eli Lilly, whoa, and try to ramp it, and then rockets, boom, woo, hey, woo, oh, head explodes, woo, all those kind of icons, wow, woo. Imagine talking like that to someone. How are you feeling today? Rocket, boom, way, ooh, ah. Imagine having a conversation like that. Just talking to someone, they speak in emoji. That'd be nuts, wouldn't it?
Yeah, a little bit, yeah.
Yeah, how are you feeling today? Poof, bam, wow, woof, yeah.
No, that's the way it's going.
Yeah. So anyway, the options were it's acceptable, 16.7%. That's the lowest option there. Don't care, 39.5%. It's a red flag, 43.8%. So, Paddy, there we are. Half people pretty much don't like it, right? I think that's all you should do. Just ticker, loads of icons, rockets, explosions. Woo! Yeah. I think this day and age, you've got to be extreme, haven't you, to get any sort of traction. If you're sensible, middle of the road, you don't get anywhere. It's either the extremes, maniacs in politics, or anywhere get somewhere, don't they? They get some traction.
I think there is a misconception within Twitter, especially that that what you write is read, and that's not always true.
Oh, I didn't know there is. I got analytics.
Yeah, well, if you've got a big following like you, but I've got like 200 people following me, I need to be realistic that what I write isn't only going to be, like in the main, is going to be consumed by people who follow me actively.
Yeah, but Paddy, now's the time. You have nothing to lose by experimenting with extreme versions of yourself. Just go for it. See what gets most interaction.
Twitter needs less extreme people.
Yeah, but consider it an experiment, Pad. Say, let's just say I'm going to do a tweet a day over the next 5 days. Let's see what tweets. So you can go from anything from emotion-based, observational-based, to fact. Normally, I think emotional-based, real stuff works, doesn't it? Because people resonate with that. Oh, but you can do several different. You can do all emojis in one go. Mention some kind of thing in the middle. Just do one a day. See what's and look at analytics. See what gets the most traction there, and then go down that vein. It's just anyone. If you get traction on Twitter and you don't mind, you've got a low following, and you don't mind which way you want to go, you just want to get traction. Just experiment one a day, see which one gets the most traction, then go down that route and expand it a bit.
Okay, cool. I'll give it a go. Yeah, I'll let you know how it goes.
Yeah, okay, cool.
Sounds good.
So so people, I'm not a big fan. Listen, I'm not a big fan. Rockets and emojis and all that. I'd actively say it's a massive red flag if anyone's literally half their tweet with a company ticker in it is all about emojis. They're literally trying to sell you their stock. They don't really care. They're just trying to hype it up. And you never see those guys saying, well, that was a bit disappointing, that result from that company. I would like to know. Yeah. In fact, someone said that on Discord. They said, I would like sort of average emojis. Like, well, that was a damp squib. The news comes out for a company, said, oh, I expect a bit more from that, actually.
Yeah.
In general, I think just avoiding the extremes is always helpful.
Yeah, I know. That's the trouble, isn't it? Social media is built on extreme. I can see tweets from people sometimes, and they you can see they don't believe in what they're saying. They're just trying to stoke up a bit of debate. And then, mate, that's so transparent. Just be yourself.
And that's the truth of everything now. All media, people have realised that to get any sort of emotional reaction, they need to really stoke the fire. And that is sadly spread into society.
Yeah, it is. It is.
Back to you.
I know. No, it is. It's sad, isn't it? I mean, wouldn't it be good if this just the honest, transparent, vaguely sensible tweets got some traction, rather than this extreme craziness. I know it's really sad. Anyway, I tell you what I did like actually.
Right.
I saw it first, Pete sort of shared it with the WhatsApp group, is that little video on augmented reality. Someone's going down the escalators in London on Tube there, and everyone's looking miserable, but he's wearing, I don't know if it's an app or, I think it is an app, because there's one of those on TikTok. In fact, Fred and Monty I showed it to said, there's an app on TikTok that does that on TikTok. It basically makes you smile. So they went past all these miserable people. He's going down an escalator, they're coming up an escalator, they're all miserable going to work, and literally it puts a smile on everyone's face. And it made me a little bit happier. It just shows you, right, that it's like, wouldn't it be nice if everyone smiled at each other? It's probably not going to happen, but then you question reality versus augmented reality. What's better? If it's going to make you feel better.
I'm sorry to take this down a dark path, but there was someone invented another version of that for use in America where it was built into glasses, and it made the streets tidy as you walked around. It removed rubbish. It removed homeless people. It just made the world look like it was actually really nice, whereas actually they were surrounded by.
That would be a downer. And maybe again in the future there'll probably have to be laws about that. The extremeness of augmented reality. You can have something, 10% off the reality, but not 100%. You can't have it clean because that's bad for society. But I'm saying Augmented reality. I mean, talking about the normal commute. If you get bored looking at people's faces on the commute in the morning, what's the harm in putting a pair of glasses on that makes people smile? And I thought about what you said, Pete. What did you say about someone looking, maybe getting angry with you?
Well, yeah, because you get there's a danger, isn't it, that the non-verbal communication kind of gets lost, and you think everyone's really smiling and happy, but in fact, someone's going to actually attack you. But with a nice smiley face.
Yeah, but if you're going to attack you. I'd rather someone happy doing it rather than angry.
Yeah, but it gives you an early warning, doesn't it? If you know they're going to be angry.
I think anyone coming towards you too close would be a warning, whether he's smiley or not, wouldn't it? But you know what? I thought other examples,
I'm sure, where someone's running away from something, but they're smiling, so it can't be that bad. But no, it turns out it is bad, whatever they're running away from, and you should be running away too.
Yeah, but how often is that going to happen? I'm thinking
I'm just playing devil's advocate.
It's just perceived reality, and I thought that I was watching Kramer. I was watching Kramer with Seinfeld, Comedians in Cars with Coffee, and they were talking about the chat show. I thought, hang on a sec, do you remember on American chat shows they started off that Lucille Ball was the first show to introduce canned laughter, and that's augmented audio. Because they are making it happier for you. Even if the gags are not killers, every gag is not a killer. Most of them are not killers. In fact, the entire show probably hasn't got a killer gag in it. But the audience are laughing like crazy. You think, hang on a sec. And all of a sudden, because laughter's contagious, it makes you a bit happy. You laugh along with it. Hey! So then, it's all about perception. It's not about reality, is it? And that's a lot to do with investing as well. I said, we look at the macro, bring it back to full circle. Look at the macro issues. You're always going to be bearish, but that's just perception. It's not reality. If they pick up on the issues, Paddy was saying there, sensationalism works, fear works. And that's why they pick up on it. That's not the reality. If you look in most shops, they're selling stuff. People will take a picture of an empty aisle. They won't take a picture of a full aisle, will they? Because that's the norm. So perception, not reality. So sometimes if you're investing in a good company, all you can do is focus on the company. No point focusing on whether it's going to rain in 6 months' time or whether there's going to be inflation in 6 months' time, because you don't know. You have no control of that. All you've got to do is deep research the company you're in. Are they doing better? Are they improving? That's all you can do, isn't it, really?
Yeah, absolutely.
Right, lads, I've got to run.
Okay.
To Wall Street, so...
Yeah, well, got a few more hours trading there, so get out there and, buy, sell.
Paddy, if you go to Wall Street, can you get... it'd make my day if you literally got Jim Cramer. Do you know what Jim Cramer is?
Yeah.
If you just come to say a nice message...
I know that Ireland was a country.
No, that's not Jim Cramer. That's Joe. That's Joe from CNBC. Jim Cramer's a multi-millionaire guy, investor. He's quite famous. He does Mad Stocks, Mad Jim. An evening show. I really like him.
He was Kramer on Seinfeld.
Yeah. No, he was. Yeah. No, but he literally brings a bit of fun to the afternoon show on it's the morning show there.
Rampant sensationalism.
No, he's quite fun. He comes up with some nice catchphrases. I quite like him. But if you see him, just say, Jim, I'm from England, a big fan of yours, a friend of mine is an even bigger fan. Can you give me a quick message? It'd be quite nice if you just hang around outside the Wall Street.
Yeah, because that'll happen. Yeah.
Let's go see if I can find that guy.
Paddy, let's finish off with some TV recommendations. And whilst you've been in the US of A, have you seen anything on TV you liked?
I watched the first episode of the second series of the morning show on the plane over.
Oh, yeah. Any good?
Yeah. I was surprised. I thought that they would ruin it in the second series, but it looks like it's going to be interesting. And I've almost finished Squid Game.
Okay.
Oh, yeah.
Let me ask you a question here. Do you think things seem better when you're watching them on a plane?
No, not in economy. It's really cramped. It's not
because I'm thinking going somewhere, travelling somewhere, and sometimes you just feel a bit more upbeat and you give it a bit more leeway. Not very often do I see bad things on a plane, or maybe they're just selecting things that are better. I don't know, but I tend to not watch duds. We're on TV. There's lots of duds on TV. Okay, any TV, film, video, podcast, book recommendations, Pete, from you?
You know what? I've finally got round to watching the second season of Succession. Because I know the third season's coming out.
Oh, do you know what? I'm thinking me and the missus may watch the second season again. Just remind us, it's coming out on the 18th, which is Monday, on Sky Atlantic. It's cracking. Have you not watched that, Pad?
I don't know, Sky.
I think you'd love that. I think you're genuine with that because it literally is. It's like Maxwell's basically a very dysfunctional family, but the writing is. In fact, the guy who wrote it
You mean the Murdochs, not the Maxwells?
No, the Murdochs. Sorry, yeah. And the guy who wrote it, which I didn't like the Channel 4 comedy, was what's the two guys, Mitchell and Webb, their Channel 4 thing. He wrote that, and so I didn't realise that because I love
Jesse Armstrong.
Yeah, I didn't like that Mitchell and Webb thing, but. It's very good, Pat. Excellent. The writing is phenomenal. The acting is very good as well.
To give me an illegal download, he does that, doesn't he?
Yeah. Do you know what I'd recommend? Like I said, I did Depressing Week last week. Comedians in cars. I really like that. It's odd how the different personalities come across. Alec Baldwin, while funny, quite intimidating. Alec Baldwin. And Jerry Seinfeld's personality went in a bit. But I like.
You mean comedians in cars getting coffee?
Yes, with Jerry Seinfeld. Yeah. Sorry.
Oh.
He picks up a car. He gets a car that he thinks is appropriate to the personality he's picking up, and they just drive around, have some coffee, and chat. Some good ones on there. Alec Baldwin is good, but he's quite intimidating. He didn't see a lot of Jerry. He's almost pushed him into. He's like Sarah. I like Sarah Jessica Parker, John Oliver, the Brummy guy that hosts the show in America. Trevor Noah is very good. I knew the guy, Trevor Noah. Yeah, Ricky Gervais is excellent, I thought, on there.
Yeah, Ricky Gervais is good. I've seen that. Yeah.
Seth Meyers is good, and in fact, there was and Norm Macdonald's on there. And I got to laugh when Norm Macdonald said to him, "So Jerry, you don't have kids, do you?" He said, "What, me? Yeah, I have kids. I have 3 kids. You have 3 kids? What? What? Are they all girls? No, I got 2 boys and a girl. Well, we can beg to differ on here, but I didn't think you had any kids." That's Ricky Gervais as well said about the gag about Hitler. It's quite good. He said, "Do you know Hitler when he realised the war was over? Then he married his cousin Eva Braun, and they had a night, and then all of a sudden he poisoned her in the morning, shot himself, got the butler to burn them both, and he said, you can say what you want about Hitler, but that was a really bad honeymoon."
Yeah.
And Seinfeld said, "Do you know what? You can say what you like about Hitler," is the line there. Because they're comedians, they pick out little lines and little observations.
Yeah.
Think, that's good. Yeah. But no, if you have a downtime in the markets, watch some good comedy, not crap comedy, some decent comedy, and it'll get you over it.
Yeah.
Okay, great.
Oh, thanks, Pad.
All right. Thanks,
that was the biggest downer of all. Okay, great.
Okay.
Sounds good.
Yeah, thanks, Pad.
Have a nice time in NYC, Pad.
Next week I'll hopefully be a bit more engaged.
Oh, okay.
Okay, Pad. Thanks for joining, Pad. You've really added to it.
Bye.
It's okay, no problem.
See you next week.
Yep, hopefully.
Bye. It's a wrap.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.